everyone, this is Vishal from Equity Guru, and welcome to Chart Attack. And really good news, especially if you're a trader of the currency markets. In fact, if you're trading anything, actually, let's say you're trading the stock markets, maybe not applying to cryptocurrencies right now because there's a big fundamental event there, but say you trade the markets, say you trade gold and silver, which is really what I want to focus on today. Major breakdowns are happening post October CPI data, which again came in lower than the estimates. But two charts that you guys know I always follow, which could hint at where markets are going. Well, actually not could hint, but they usually give a really good indication of where the equity markets and other assets are going. Let's start first of all with the US 10-year yield. Again, looks like we have a double top pattern here about to trigger with this candle close below 3.9%. Again, on the day I'm recording, there's still some time left for trading, but it does look like after this uptrend, after this double topping pattern, we are going to see the 10-year yield drop a bit lower, which will be very positive for the equity markets in general. And then the dollar here, which I think is huge because you've been in this really, really long uptrend in the US dollar. We then began to peak out, just basically ranging here since late September, up and down. Some say a triple top. I don't really think so. I drew a bit of a trend line here, but I mean, you see that basically we're ranging here. That's the key that you want to keep in mind here. Rather than making new higher highs or new highs breaking out above this 114.15 level, we just continue to range below 114.15, and we have now broken below this support level, which I have here drawn out around the 110 zone, but I like to use the 109.50 level. Quite a strong breakdown, right? So we do have a dollar breakdown, which is going to be quite welcoming for, I guess, our friends in Euroland, people who have money in British pounds, and also the Japanese yen, because I think that this could see a continued lower move into the dollar as, I guess, markets price in a more or a Fed pivot, right? That the Fed's not going to be too hawkish come December because we're seeing signs of lower CPI, and the Fed might back off a bit, which is going to see a drop into the dollar or drop in the dollar. Of course, if the Fed comes out hawkish come December, you'll probably see a fake out where the dollar breaks back above 110 and continues higher. But as of now, this breakdown is triggering a reversal in the US dollars. Two things we could see, right? We could see either just a continued sell-off in the dollar, or what I prefer to see is you see a bit of a retracement higher, maybe not exactly at 109.50, but I'd love if we see that, and then an eventual lower high taking us lower into maybe the 105 zone. That's what I want to watch for as my first support level. Of course, if you look at the charts of the dollar, you can see here the inverse of the dollar index is, of course, that euro US dollar. It looks like the euro's finally going to reverse from this major fall, get a bit of momentum to the upside. You're already seeing a breakout potential here also in the British pound. Let's take a look here at the US Canadian dollar. Looks like the loonie is going to strengthen. This is actually a trade that I was in. We were shorted on this breakdown here, and we are seeing our profits play out here in US CAD. Probably seeing some, well, not probably, you are seeing some relief here in the US dollar, Japanese yen. Of course, the yen just getting pounded, but seeing some strength today as the US dollar weakens. So very important breakdown in the US dollar. And of course, let's look at gold and silver, because as many of you guys know, gold is known as the anti-dollar. So what happens with with the dollar obviously impacts the chart of gold. We were talking about this double bottom pattern, which did break out on the 4th of November. Very nice breakout, strong breakout. Look at that retest as well. Exactly what we want to see also on the Dixie, but on the opposite end of the spectrum. But in this end, we saw that retest, buyer stepped in right at that retest, and gold is actually looking to close above a very pivotal zone, in my opinion. If I take it out to the weekly chart for gold, a lot of you guys know that I was actually quite bearish in September, because I saw this breakdown on the weekly chart, and this is how it looked like, right? I was like, oh no, that's not good. It does look like gold has broken below this major 1720 resistance, or sorry, support zone. It's now new resistance, and until we close back above 1720 on the weekly zone, we are likely heading to 1500. You can see here, we just ranged a lot, right? Gold just failed to sustain that momentum to the downside, which is usually a good indicator. This is a weekly chart, right? So this is almost over a month of price action, just doing nothing but range between these levels, not sustaining that momentum lower, which is usually a strong sign that, okay, if we don't see that momentum after a few weeks' time, it's likely not going to continue. And now we're getting a close back above 1720. 1720 is going to become support again. And I think this is something to be excited about if you are a gold investor, because, yeah, clearly you have a bit of a reversal. And some of you with keen technical eyes and market structure eyes probably see a breakout here as well, which looks very strong. Same could be said, I would say, on silver as well. You have a bit of a breakout here. But I have a resistance zone here at 22, which is exactly similar to a major weekly zone that we see on gold. Whereas gold is breaking above its weekly zone, silver is still testing it, right? This 22 area, you can see how important it was, held as support since September 2020. We broke below it in 2022 in May. We had that retest, we pulled back, and now we're testing it once again. And hopefully, as a silver bull, as long as the dollar continues to weaken, we can get that nice strong close on the weekly chart above 22 and play silver as well. So very, very promising looking charts on the 10-year yield, and especially the US dollar, which is going to provide a welcome relief for currency pairs that are based in US dollars, but particularly here in gold and silver. And gold, very, very strong, right? I have to say, we get that weekly close above 1720, then my downtrend alert or bias is basically nullified. And it does look like that's going to happen, although we still have one more trading day left in the week at time of recording. So maybe this does not close above 1720 on the weekly chart if Friday's price action sees silver drop lower. But that's it from me, folks. Give this video a thumbs up. Be sure to follow us and let me know in the comments below if you are thinking that this is now a major US dollar reversal, or do you think the dollar still has some legs to go, maybe based on some sort of move back into risk-off assets, or perhaps the Fed maintaining a very, very hawkish stance? Let me know in the comments below, and I'll catch you guys all in the next chart attack video.